More about the week ahead is Brent Wilsey, president of Wilsey Asset Management. Good morning, Brent. Good to see you.
Good morning, Lauren.
All right, so we have some good news, some maybe we wish were better news. Let's start with today. The Federal Reserve reports consumer credit today at noon, and that's not a good thing.
Well, actually, it is a good thing. I mean, you can look at this two ways. We look at it, the consumer credit is going to hit an all-time high expected of $4.17 trillion. Now, because we think of the jobs are so well, we believe that's a positive thing because consumers feel very confident to go out and extend credit and get more credit. So we think it's a good thing seeing that rising. So
okay,
looking at two
we
ways.
can look at that two different ways,
Exactly,
yes. But consumer confidence is always a good thing. Maybe paying with cash might be a good thing too.
Well,
just saying.
Yeah, just saying. Okay.
Okay, and then tomorrow we have the JOLTS report, which kind of backs up the jobs report from last week, which was pretty good.
It was actually very good, Lauren. We had a very good report on Friday. The JOLTS report stands for Job Opening Labor Turnover Survey. And this shows you how many openings jobs there are. And actually, there's about 7.4 million jobs that are going to be open. Now, it's down a little bit from last week, is last month down about 9,000. But the big thing here, Lauren, is that there are only about 6.5 million people to fill 7.4 million jobs. So you say, well, wait a minute, there's a disconnect there. That's another positive. So many jobs out there. If you want a job, you can get one. More jobs there than people to fill those jobs.
Yeah, definitely good news there. And you also make a note of PEPSIIS earning reports that are expected to be down from last year. Why is that important to regular Joe?
That's important to regular Joe because earnings are going to start coming out next week, and we want to see our companies doing better than last year. How's the economy doing? I was kind of disappointed because last year Pepsi earned $1.61. The estimate is for $1.50. Now, they could come in higher than that, but I like to see this year's earnings higher than last year because it shows they're doing better. And this is just one company, so don't jump to conclusions, oh, the economy's doing terrible.
Right.
But these are things I look at to say, should I be buying, should I be optimistic, or should I be cautious now because things aren't going as well? And Pepsi's the first big company to actually start reporting earnings, which we'll see when they come out tomorrow.
But we're seeing good news in the way of the tech world. I mean, tech job numbers are fantastic, and there's a lot of growth there, which is a good sign.
Well, job numbers are different because there's a lot of jobs out there, but what we're watching is that how are the earnings for the companies doing? Because the problem being is that there is some problems with the trade, tech companies especially, with this whole thing with Huawei, can't sell them products, can't sell them products,
yeah.
A lot of different things there. So that's why it's so important. Every quarter we look at these earnings to say how are the businesses doing, not to the estimates, but how they're doing compared to last year. With the companies that we own in our portfolio, I like when they grow their earnings more over the previous year, even if it's only 2 or 3%. That's what I look for overall.
Okay, and then Wednesday, we're going to be looking for a release of the minutes from the Federal Open Market Committee's policy meeting. What are you looking for there?
Well, the minutes just kind of back up what they said back on, the 18th, I think it was when they had the actual meeting. And what we're looking for here, continuous talk about interest rates. Interest rates, we're so concerned that they're going to be cutting them, not cutting them. So that'll be another time on Wednesday. They're going to talk more about it. They're going to cut a quarter, cut a half. I still stand on the side. I don't want to see them cut them yet. I think we can wait. But again, we'll see as data comes in, especially with these good numbers coming in, consumer credit, the JOLTS report. We got good numbers. Let's not be too impatient to cut when maybe we don't need to.
Okay, so maybe we'll get some of the rationale behind where they are.
Yes.
And then on Thursday, we're kind of looking for the consumer product index, like
Consumer Price Index, which talks about inflation. And we do want some inflation, and actually the CPI is expected to come at 0. And this is what they call the core inflation numbers. Takes out energy and food. This is what you're really seeing prices increase. We want a little bit of inflation because how would you feel after 5 years? Gee, my house didn't go up in value at all. Not going to make you feel good. So we do want to see some inflation. What worries us here is that because technology has done so many things, we just can't seem to get prices. You can go in the store now, and you can look at the price of the store, look on your phone like, oh, I can get online the same price, even lower. I'm going to do that there. So we need a little inflation we need.
But on the flip side of that, the production price index, what are you looking for?
We're looking for a little increase there, about 0.1%, which means that producers are seeing increase in the prices, and at this point in time, they're not passing them on to consumers. So good for the consumers, but again, I want to see some inflation, and this could be why we may want to cut interest rates a little bit.
Okay, well, we'll wait and see. And then big news today, Deutsche Bank laying off thousands of people, and the speculation that that could have an effect on the global market.
Yeah, you never want to see the big banks have problems. And gosh, I'm pretty sure 5, 6, 7 years ago, this stock was on $140 a share. It's now around $7 or $8 a share. Not doing good. This is an example of a big bank having problems. But again, global things a little bit different than here in the U.S. The U.S. doing very well. Globally, Europe not doing so well. So Deutsche Bank showing some pain that they got to lay off people. Not a good sign for Europe and overseas.
All right, Brent, we've got a lot of things to look forward to this week. That's why people pay you, right?
Yes.
Thanks for being with us this morning, breaking it down for us. We appreciate it. And